Gold is currently trading at $1,533. Silver is at $40.76. The silver to gold ratio is 37.61. Oil is at 111.11. And the U.S. dollar is at 73.05. First, John Williams. Hyperinflation and double-dip recession ahead. The U.S. is really in the worst condition of any major economy or country in the world, said John Williams. He also says that the Canadian economy is closely tied to the U.S. economy, therefore bad times in the U.S. will be reflected in Canada. In addition, hyperinflation could happen to the U.S. as soon as 2014. Next, food prices up. Expect them to go higher. Grocery prices have already risen 3% over last year, and they're going to go a lot higher very soon. Global demand, growing populations, the reported crop failures, and a weakening dollar are the reasons. Since about 8% of the U.S. spending is on food, it does not show up in many indexes, unlike China and India, which is 33 and 57% respectively. Next, James Turk, silver forming another bullish flag formation. James Turk said of silver that volatility scares a lot of people, but silver is not unique in this regard. Even blue chip stocks and other high-quality assets drop in price during certain periods. He still says that there will be $1,800 gold and $50 silver by the end of June. Finally, he said that silver is consolidating before it begins to climb to higher levels, so keep stacking.
While more speculation has been raised on the reasons for NATO's intervention in Libya. And as RT's Laura Emmett reports, the organisation may have been trying to prevent Gaddafi from burying the American buck.
But some are convinced intervention in Libya is all about currency, specifically Gaddafi's plan to introduce the gold dinar, a single African currency made from gold, a true sharing of the wealth.
It's one of these things that you have to plan almost in secret, because as soon as you say you're going to change over from the dollar to something else, you're going to be targeted. There were two conferences on this, one in '96 and another one in the year 2000, called the World Mataba Conference, organised by Gaddafi. And everybody was interested, and I think most countries in Africa were keen.
Gaddafi didn't give up. In the months leading up to the military intervention, he called on African and Muslim nations to join together to create this new currency that would rival the dollar and euro. They would sell oil and other resources around the world only for gold dinars. It's an idea that would shift the economic balance of the world. Countries' wealth would depend on how much gold they have, not how many dollars they trade. And Libya has 144 tons of gold. The UK has double that, but 10 times the population.
If Gaddafi had an intent to try to reprice his oil or whatever else the country was selling in the global markets and accept something else as a currency, or maybe launch a gold dinar currency, any move such as that would certainly not be welcomed by the power elite today who are responsible for controlling the world's central banks. So yes, that would certainly be something that would cause his immediate dismissal and the need for other reasons to be brought forth for removing him from power.
The UK's gold is kept here in a secure vault somewhere in the depths of the Bank of England. As in most developed countries, there's not enough to go around. But that's not the case in places like Libya and many of the Gulf states. A gold dinar would have given oil-rich African and Middle Eastern countries the power to turn around to their energy-hungry customers and say, sorry, the price has gone up and we want gold. Some say the US and its NATO allies literally couldn't afford to let that happen. Laura Emmett, RT, London.
Gold is currently trading at $1,500.19. Silver is at $37.76. The silver to gold ratio is 39.73. Oil is at 107.57, and U.S. dollars at 73.05. First, Mexico just bought $4.6 billion worth of gold. The race to physical gold by central banks continues as Mexico's central bank bought $4.6 billion worth of gold for a total of 93.3 tons. In addition, Thailand also bought 9.3 tons of gold in March. So keep stacking. Next, U.S. economic data pushes dollar down. The European Central Bank is seen outpacing the Fed on rate hikes as the euro rose above $1.49 and the dollar has fallen to a fresh 3-year low compared to the other basket case of currencies. Next, WikiLeaks exposes North American integration plot. According to a leaked document by WikiLeaks, as of 2005, members of the Council of Foreign Relations have been reviewing ways to integrate Canada, Mexico, and the U.S. If successful, the U.S. Constitution and its Mexican and Canadian counterparts could soon be rendered void. Next, 5 alternatives to the Federal Reserve. 1. Gold and silver. 2. Locally produced tender that does not look like Federal Reserve notes with a minimum of $1 value. 3. Local credit unions and state banks. 4. Interest-free treasury dollars. 5. Bartering. Next, the silver correction is over. Next stop, $62. The current massive plunge in the price of silver has some asking if the silver bubble is popped. Simply put, the fundamentals of the silver market are unchanged, even with Bolivia nationalizing its silver mines and the changing margin calls. There is still a physical shortage of silver despite the phony paper silver selling. So, keep stacking.
In order for wealth masters to achieve their goals and the people in the community, they have to move forward with the best knowledge that they have, so when the future comes, they're not taken by surprise.